Okay, so now I see you again. This is a question that I designed myself for in order for you to have a logical and practical understanding of cash flow statement. So this question says that attached are the financial information of Ah Chong Chicken Rice Private Limited. This company was incorporated on or registered or started on 1 January 2013. Okay, required prepare the following for the year ended 31st December 2013 and 31st December 2014. Okay, income statement. Income statement is actually profit and loss account. It's the new name for profit and loss account. B, statement of financial position. Statement of financial position is the new name for balance sheet. And C, cash flow statement. So this question asks you, okay, so this is information provided in the question. Summary of receipts and payment, bank balance at beginning bank balance at 1 January 2013. You see, this company incorporated or started on 1 January 2013. Okay, so at the beginning, the bank balance is zero. Add receipts. These are all the receipts and less payments. Then you got the ending bank balance. Okay, um, this is actually a cash flow statement in layman's term for a layman who does not really understand about accounting. They will do a cash flow statement like this. Cash flow means um, a statement or something a layout of all your money come in and money go out. Yeah, so in simple terms, cash flow means um, a piece of document that shows all your money come in and all your money go out. That means a piece of documents that shows all your receipts and all your payments. So this is actually cash flow statement, but this is in layman's term. So in the exam, we are supposed to do a cash flow statement in prescribed term, in a prescribed format. That means a cash flow statement in a good format, in a format that we supposed to learn and we supposed to do, so called in a more professional format. Okay, so that means this cash flow statement in a more professional format is a hybrid of this cash flow statement to a layman's format. Okay, so in other words, in short, cash flow statement, whether you do it in a simple layman format or in a professional format, um, ultimately it boils down to the point that what I'm trying to explain is cash flow is a statement that show you what are all your receipts and what are all your payment, and it should tally. You see, this really makes sense. Your beginning bank balance, add all your receipts during the year minus all your payment during the year will be your ending bank balance. Okay, so this is basically what a cash flow statement is all about. This is a cash flow statement to a layman's term. So we are supposed to do a cash flow statement in a good format. Okay, for the purpose of examination as required in the exam here. Okay, so here we have what you call additional information. Fixed assets are depreciated on a straight line basis at 33% per year. Okay, so this one I did not really read in details now, so I will glance through my question. So this one in 2014, again the beginning bank balance on 1st January 2014 will be equal to the ending balance of 31st December 2013. Okay, add all the receipts during the year minus all the payments during the year, then I will get my ending bank balance. Okay, so then the question says these are the supporting schedule for year 2014. These are all my purchases. Uh, and then closing stock is 1,000 and my cost of sales is 22,800. And these are my stationaries detail, and then rent, and then employee salary. And then here additional information says debtor balance at 31st December 2014 is 1,000. So this is my question. This is the question paper over here. Okay, so the question says prepare income statement, statement of financial position, and cash flow statement. So as usual, my usual way of doing things is, you see, the question says prepare income statement, statement of financial position, okay, A, B, and the cash flow statement. So you can pause this video and you can follow me. Okay, this is a format, a way of answering the question that I suggest. Okay, so now if you want to look carefully, look at what the question required. Prepare the following for the year ended 31st December 2013 and 31st December 2014. Income statement, statement of financial position, and cash flow statement. Okay, without worrying and thinking too much, I sit down calmly and plan I am I going to answer this question step by step. Okay, plan carefully. So look at this question carefully here, and then I go back here. Okay, so the question says, okay, so this is the company name, Ah Chong Chicken Rice Private Limited. Okay, part A of the question says prepare income statement for the year ended 31st December 2013, and here 2014. So I'm going to lay out my paper this way, dollar sign, then draw the line. Then without thinking too much, I tear another piece of paper. Okay, this is part B, Ah Chong Chicken Rice Private Limited. This will be my balance sheet. Balance sheet, the new name is Statement of Financial Position for the year ended 31st December 2013, 2014. It looks simple to you, but the thing is, all the difficult question, I started this way. Because I don't want to look at the question and then I keep worrying and then I get so confused, I get panic and I don't know how to start even. I don't know how to carry on. So please, I suggest that you follow me. Okay, you also calm down yourself and lay down all your papers this way. Okay, so for balance sheet, I will need two pieces of paper. So this is also balance sheet, a continuation of balance sheet. I put part B, and I just do 2013 and 2014 and two columns, and I draw the line. And part C, okay, so I write the company name, Ah Chong Chicken Rice Private Limited, cash flow statement for the year ended 31st December 2013 and 2014. Two columns like this for cash flow statement, part C. Okay, cash flow statement also, I need two full pieces of paper like this. Okay, so this part C, this is the continuation of cash flow statement. I hope you follow me. Please follow me. Okay, so then now, okay, so I'm going to lay out. So now the second step is, okay, so this one is the income statement, my piece of paper. Just now we have laid down already. I put sales, then I leave two lines, less cost of goods. So opening stock, add purchases, I leave one line, less closing stock. So after less closing stock, I draw one line here. Because the subtotal I put outside. Okay, then here gross profit, then I leave one line there, less expenses. I don't know whether it's net profit or net loss, so I put here net. Please follow me. Okay, so this one is statement of financial position. So I put here non-current asset. Non-current asset simply is the new name for fixed asset. Non-current asset means the same as fixed asset. Okay, I leave about half a page. I put here current asset. Then here I put total asset. You see, I draw the two lines like this. Draw the two lines like this. Here also, draw two lines at the outer column. Two lines like this, right? This is not difficult to follow. So step by step like this. Okay, then part B, this is the continuation of your statement of financial position or your balance sheet. So the second piece of paper, I put equity. About half the page, I put here current liability. Equity means shareholders' funds. Yeah, equity is the same meaning as shareholders' funds. Okay, so about half the page, then I put the underline and double underline at the outer column like this. Then this one, cash flow statement. Look carefully and follow me. Okay, so cash flow statement, I will do cash flow from slash bracket used in operating activities, and I underline. So here, Ah Chong Chicken Rice Private Limited, cash flow statement for the year ended 31st December 2013, 2014. Okay, follow me with all the titles and the layout like this. About 2/3 of the page, roughly, about 2/3 or roughly close to 3/4 of the page. Then I put cash flow from slash use in return on investment and servicing of finance, then I underlined it. Okay, then the second piece of paper for cash flow statement, I put cash flow from slash use in investing activities. Okay, this one. Then cash flow from slash use in financing activities. Okay, so then here I will put net. This arrow up means increase slash bracket decrease in cash and cash equivalent. So whether it's a net increase or decrease, so-called in cash, okay? Plus your cash and cash equivalent at the beginning of year will be equal to your cash and cash equivalent at end of year. So this is so-called quite similar to that layman format just now. Remember, your cash at the beginning of the year, add the net increase or decrease in the cash during the year will be equal to your cash at the end of the year, right? Is quite similar with just now, right? Even though this has to be in this format, but practically it means the same like just now that format. Cash at the beginning of the year, add or minus the net increase of cash during the year will be equal to your cash at the end of the year. Okay, and these are the 4 categories in your cash flow statement. This one, cash flow from use in operating activities. In part 1 of the video, that is what I have explained to you. Okay, step by step like this, not difficult to follow, right? Okay, so then now, okay, then, okay. So just this is what we have done just now. So now I am going to even write more things here. Write more things. How I get all these things is actually I will look at the question. Okay, so you see, this is the question. So under non-current asset or fixed asset, I can see here I got tools and equipment, computer software. This is what I saw here. Okay, that's why okay, that's why over here you see over here you see tools and equipment, I put bracket cost, because I don't have so much space to put three column for 2013 and 2014. So that's why I do it in this way. So I will put my cost here, then less accumulated depreciation, then I underline, then my net book value I put in outer column. This one same. Tools, equipment, and computer software is just now what I saw from the question, right? So I write it out nicely here. All right, not difficult. Okay, then part B is still, you see, nothing changed, it's still empty. Okay, on cash flow statement here, okay, you see, on part 1 of the video, I remember, okay, so cash flow statement, just now in part 1 of the video, cash flow statement, I start with net profit, because that one I want to teach you in the most simple manner, and that one I don't include, I don't have interest in that profit and loss account. Okay, but in the exam most of the time, cash flow statement, you should start with net profit before interest. Okay, remember this, net profit before interest, and then put here adjustment slash dot dot. Okay, adjustment, for example, adjustment depreciation, okay, that you must add back to net profit. Then leave about roughly about maybe 4 lines, even if 5 lines also okay. Then working capital changes. If not enough space, then later you find that you got not enough space, then you got to squeeze in between the lines. Or if you got too much space, it's okay one. It's okay if you got you got extra lines blank, it's okay. Working capital changes. So now I'm going to lay it down so that I won't get confused. Okay, so in part 1 of the video, you have already understood that increase in stock is a cash outflow. So I lay this down so that I won't confuse myself. I got to have a very clear mind So increase in stock, bracket means money go out, okay, it's a cash outflow, slash, I do all this, okay, and decrease in stock is the opposite. If the stock decrease from last year, then it's actually a cash inflow. Indirectly, it's a cash inflow in stock. So increase in stock is a cash out, increase in debtor is a cash outflow. So this arrow means increase. So in the exam, it's okay, you write like this. Put in bracket, slash, decrease in debtor is opposite, will be money come in, decrease in debtor. That means my debtor are people who owe me. If the debtor decrease, that means they pay me back, so that is money come in. Okay. So increase in creditor is money come in, is cash inflow. Okay. Yeah, creditor are people whom I owe money to. So if I owe people more money, that means the money come in. You see, if I owe you more money, that means you have lent me money. So to me, it's money come in, correct? So increase in creditor is money come in, is a cash inflow, slash decrease in creditor. So creditor are people whom I owe money to. So the creditor balance decrease. So you are my creditor. That means I pay you back the money, correct? So it's a cash outflow. That means my money go out. My money go out, pay to you, pay back to you. So that is decrease in creditor is money go out. Decrease in creditor. So I have sorted it like this so I won't confuse myself. So then I leave about 3 lines. Yeah. Okay, then I put that means all these figures I will put inside, then the subtotal I put outside, so it will be very neat and tidy. My work will be very neat and tidy. So then then I will put the total for this category outside here. So this is called cash generated from operation. We learned in part 1 of the video, right? Yeah, so this is what we mean. Okay, so this one I still leave it blank. You see, step by step like this, not difficult. Okay, then part C still blank. Then I need a piece of paper for workings, so I tear one more piece of paper for there. Okay, so bracket, okay, W stands for working, so I put here working 1 first. So this one I still haven't do anything. Okay, then now, okay, so how come suddenly so many figures? Oh, actually it's not difficult, right? That is because where do I get all these figures from? 45,000, 18,700 is actually get from the question paper. Okay, 45,000 is the sales. Okay, so 18,700 is the cost of goods sold. So you see, all these are expenses: rent, water, electricity, salary, incorporation fees. So actually, all these expenses I just put in the profit and loss account, right? Not difficult, right? So sales is 45,000. So yeah, 5.5. Yeah. So you see, this is from just now. 5.4. Yeah. From just now over here. Yeah. Okay, so this is, except the depreciation I calculate. So and also this one government grant, I'm going to explain now. So you see, all these 45,000 opening stock is 0 because at the beginning of the year the company just started, there's no beginning stock. Okay, so opening stock I put dash, add purchases. Closing stock is also 0 according to the question. There's no closing stock. Then gross profit. Okay, you all should buy the notes as suggested. I will give you even the question paper for this when you buy the notes, so that it's easy for you to refer. Okay. So okay, so then now you know that it's not difficult. So now you see, all fixed assets are depreciated on a straight line basis. Okay, so tools and equipment is 5,002 at 33% per annum. Full year's depreciation is charged in the year of purchase and no depreciation in year of purchase disposal. Okay, so this one government grant, note 2. Capital receipt of 5,000 was given by the government to finance the purchase of computer equipment and computer software. Another 3,000 was a revenue receipts as the cash grant was given by the government to finance business operation. Okay, those of you who have taken O level, you all have learned um, capital receipt, revenue receipt, capital expenditure, revenue expenditure. Okay, capital expenditure is expenditure on something like fixed asset, okay, for long-term use for business. Same, capital receipt are receipt of a long-term nature, and therefore it should be matched against capital expenditure. Again, capital receipts should be matched against capital expenditure. Okay, capital receipt are receipt in respect of things that are long term in nature. Okay, so that means this 5,000 was given by the grant to finance computer equipment. So the government give you grant to finance the purchase of computer equipment. So this is a capital receipt. So it should be matched against this capital expenditure of fixed asset. The other 3,000 was a revenue receipt. Revenue receipt, so I will put in a profit and loss account because it's a revenue, right? So the 3,000 is a revenue receipt. Okay, so no closing inventories, no closing stock at 31st December 2013. No receivable, no debt, that means in other words, no debtors and creditors at 31st December 2013. So now look at this question here. Okay, so explained just now, the 3,000, I will treat it as a capital, as a revenue receipt put in the income statement, the profit and loss account. And then I will jump to the statement of financial position. Okay, this is the statement of financial position. This is the continuation, the equity and current liability part. Okay, so then this is the asset part. Okay, tools and equipment, as stated in the question, the cost is 5,002. 5,002, so assets should be depreciated at 33 and 1/3% on a straight line basis. That's what the question says. 5,002 times 33 and 1/3%, that is 1,733. So this is the first year account, so accumulated depreciation is also 1,733. So 5,002 minus 1,733, this will be the net book value I put in the octal column. Okay, just now the question says that, just now the question, the question says that out of this 8,000, 5,000 was given by the government, you see here note 2, to finance the purchase of equipment and software. Okay, to finance this computer equipment and software. So the government give us 5,000 to finance this capital expenditure. Okay, so how are we going to deal with this in our accounts? So now look at this working sheet. So I put a note here for the students. You can put a note in the exam also. Capital expenditure should be matched with capital receipt. So the computer equipment is computer software. The cost is the capital expenditure that the company pay for computer equipment and software is 3,000 and 2,000. Then capital receipt, the government grant that we receive in respect of this purchase is also 3,000 and 2,000. So the net cost is 0. So that's why in the balance sheet, so the computer equipment and computer software is 0. Yeah, so I put here bracket W1, means I'm asking the examiner to please see working 1. Okay, W1 stands for working 1. So this is, so since there's no cost, there won't be any accumulated depreciation also, right? So it's not difficult. So that means this sale, so here 18,000, so I put here outside. So 45,000 minus 18,700, this is the gross profit at government grant, the revenue expenditure, the revenue receipt, sorry. Then these are my expenses, which I just copy from the question, and this is the total, and I get my net profit. Okay, so this is the balance sheet, the statement of financial position. Okay, so this one under equity, ordinary shares 42,000. Okay, retained profit, I copy from here and then I put here. Okay, ordinary shares of $1 each, 42,000. Where did I get this from? It's actually from the question. Okay, so at the beginning of the year, the question have nothing. Then the shareholder invested or pump in 42,000 of their own money into this company. So that means, you say par value $1 each. So that means the share capital, the ordinary share of the company is 42,000. Yeah, so that's why I put in the balance sheet. Ordinary share of $1 each, 42,000. So this one at retained profit here is 54567. So just now, remember the question says there's no receivables and payables in 2013. So this one current liability 0. So the total for this is 54567. And then the bank balance is 51,000 as stated in the question. Okay, the bank balance is 51,000, right? As stated in the question. So that's it. That's what my balance sheet is about, right? So the balance sheet, you see, if you put your figures correctly from the receipt and payment, your balance sheet will balance. Okay, as I explained in the previous lessons, especially lesson 1. Okay, this one will balance. So that means this one is the receipt minus your payment. Then you get your net profit. This one depreciation. Depreciation is under the asset minus the accumulated depreciation. So this is the net book value at the bank balance. Okay, this is the total asset, and then this one ordinary shares at the retained profit. Retained profit is after minus depreciation. So is your non-current asset is also after minus depreciation. See, your non-current asset, your asset minus the depreciation, then you get a net book value at your bank balance. Okay, this is the total assets. This is your total assets. Okay. Then this is your ordinary shares, 42,000. 42,000. This is the difference of the receipt minus all the payment and also minus the depreciation. That will be your retained profit. Okay, it's also 54567. Okay, can you see the logical relationship with this? Logical relationship of this. Okay, so this is your receipt from the share capital, and this is the difference of all the revenue and expenditure. Okay, it will be a retained profit, including minus the depreciation after lessing out depreciation. So it's 54567. So your bank balance is also all your receipt minus all your payment. Okay, all your receipts minus all your payment. Okay, and then you add the total, the net book value of your asset is also 54567. Okay, so as if you have gone through with me from day 1, you and then later on you can analyze this carefully, then you can see that if you put all these diligently in all your balance sheet places and your profit and loss account, your balance sheet will definitely balance, right? Okay. Yeah. Okay. Okay, so then now we come to cash flow. So your net profit before interest, actually you get from your profit and loss account. We don't have interest, so net profit is just net profit. Then you add back your depreciation. Okay, then you put a subtotal here, and then all these, at the first year there's no stock, debtors and creditors, so these are all 0. So your cash generated from operation is 14300. Okay, so here is 0 because it's nothing. Okay, then cash flow from or use in investing activities, government grant relating to purchase of non-current asset. Is it non-current asset? Okay, means the same as fixed asset. Fixed asset is actually investing in nature. It's actually investing activities. You invest in fixed asset or non-current asset, you know. So the government grant that received in respect of the non-current asset 5,000 as according to your question, is actually an investing activities, is investing in nature. So no bracket means money come in. Okay, bracket means money go out. Purchase of fixed asset 10,200. You see from the question, purchase of fixed asset add together. This is a purchase of fixed asset. 5,002 plus 3,000 plus 2,000 is 10,200. Okay, so I get from the question. So 10,200. So I put a subtotal here will be 5,002. So then the business owner invested 42,000 in this company. Okay, so this is money come in. 42,000 is money come in because the business owner pump in, so-called the shareholder pump in 42,000 into this company. This is financing activities, right? Proceeds from issue of ordinary shares is actually financing activities. So you just use the layman logical kind of thinking. You can figure out which category you should put in. Anything regarding fixed asset, of course, I would think is in investing activities, put under investing. So this one, proceeds from issue of ordinary shares. I would definitely think it's a financing activities. So I put under this category. Okay, so then I put the subtotal outside. There's nothing else, so I put the subtotal outside. Okay. So this one, then I add up all this subtotal. For 14,300 minus this, add this, will be 51,100. Okay, that is because I actually just reshuffle all these figures from this receipt and payment into that proper format. Yeah, so this cash flow statement is actually similar like the layman format of the cash flow of the receipt and payment cash flow. Okay, so 2013 now I have filled in all the figures. I have done it already. So then I will come to 2014. Okay, so now 2014, I have extracted the question paper here for easy reference. So these are the figures for 2014, right? So this is the beginning bank balance, ending bank balance. So what is my style of answering the question? My style of answering the question is, since I have laid out all my papers, I will slot in whatever numbers that is easy for me to slot in. For example, the bank balance 63767. I can just take this number and slot inside this place. Okay, and then so I will take in whatever, since you have laid out everything. So debtors balance is 1,000. So go and put here debtors slot here. Then stock is 1,000. Where did I get the stock from? Stock 31st December 2014, 1,000. I put there. I put 1,000 here. Okay. Then prepayment 3,100. Okay. According to this receipt and payment, rent for January 2015 paid in advance. Salary for 2015 paid in advance. So this is prepayment. Okay. So that means you are paying for next year expenses. So if you pay your rental and salary in advance, you pay your January. So that means you think my rental prepaid and my salary prepaid is something like debtor. So that means if I pay my rental in advance, my landlord will owe me 300 as at 31st December 2014. Correct or not? Okay. Next month's rental I pay now. I paid already. So I mean, you just think. So that means will you think that as 31st December 2014, is it my landlord owe me 300 or I owe my landlord 300? This 300 I pay in advance. Next month's rental I pay in advance. So make it simple. So that means, for example, if 31st December I want to get out, I would tell my landlord, hey, you still owe me 300 advance rental for next month, correct? So that means that 300 is my landlord owe me. So it's same meaning like debtor. Salary also. your employee go and ask you, hey boss, can you pay me January 2015 salary now because I need money, I got some problem and I need the money. So you are so kind, you pay your employee first. So let's say 31st December, your employee say, I want to resign. Then you go and tell your employee, you owe me $100, correct or not? Because I pay your next month's salary in advance, so you owe me 100. Yes. So this 300 and 100 is same meaning like debtor. That means they owe me. Okay. So you put under current asset, same category, because debtor is under current asset. So this prepayment is same category, is in the same category as debtor. You can call it prepaid expenses or prepayment. The term is not so fixed. You can call it the other receivables also. So whatever terms that um, more or less describe what this thing is about, you put it here, is okay. Yeah, in accounting, the term is not like definitely fixed. So I put prepayments, 300 plus 100, 400. So that's how I got all these figures. So these tools and equipment, this one wait first. Okay. Okay, so then ordinary shares, you see there's no, last year the shareholder invested 42,000 and that's it. This year there's no receipt in respect of shares. Okay, so the share, ordinary share is still 42,000. Okay, this retained profit is actually 2014. Okay, this one wait first. 67567. Okay, now mind. Okay, so this is how I got my figures over here. Okay, so then so now that's why when I have laid down the format, I will actually put in whatever figures that is easy for me. So if you look at the profit income statement, the profit and loss account, okay, so then now, okay, it's easier for me to look from here. Okay, you see the receipt from sales is 54,000. Okay, if I look here, additional information, debtors balance is 1,000. So this is the sales that I have received in cash, and then this 1,000 is what I have sold on credit, but it's not received yet. So that means my total sales will be what I received plus what I have sold and not received yet. So my total sales will be 54,000 plus 1,000 will be 55,000. This is my sales. And then my purchases is 23,800, and then my stock is 1,000. 23,800 stock is 1,000. So I have my cost of goods sold. This one 23,000 minus 1,000, so 22,800 is my cost of goods sold. So this one minus this one will be my gross profit. So government grant, this year's one don't have. Okay. You see, this one, the purchase of goods, if I total up my purchase of goods here is 22,800. But according to this schedule, my purchases is 23,800. So I check the details here. This one is until 10 November. You see, these purchases on 12 November 2014. What is this? That means this 1,000 is purchased, but not paid yet. You see, it's not over here. So that means this 1,000 should be in creditor, correct? Because it's a purchases and it's not paid yet, so in creditor over here, put under creditor. Okay. Then all these expenses, okay, until professional consulting fee, all these expenses over here. Basically, I just copy copy, rent, professional consulting fees. So all these expenses is actually being copied and put here. So that is easy. Okay, so then now what does it say here? Proceeds from sale of tools and equipment, 500. So the somebody buy my tools and equipment from me and pay me 500. The net book value of the tools and equipment is 667 and the cost is 1,000. So actually I have do under the workings here. Okay, so tools and equipments. Okay, let's take a look here. So the net book value of the tools and equipment is 667. Okay, so you see when I look at carefully at the whole question again, it says here that full year's depreciation is, you say this is the beginning of the question. Full year's depreciation is charged in the year of purchase, and no depreciation is charged in the year of disposal. Okay, so now I got it already. So the net book value at the beginning of the year, you know, is 667, but I sold for 500. So that means I sold these tools and equipment at a loss of 667 minus 500 is 167. So this one, loss on sale of tools and equipment, I put it under expenses also, 167. Okay, good. So under here workings, I put number 2014 here, workings, tools and equipment. So the cost of the equipment sold, the tools and equipment sold is 1,000. So that means in my balance sheet, the cost will be reduced by 1,000, 4,002. Okay, so then I will, so that means the cost of the tools and equipment will be 4,002. Okay, so the depreciation will be 4,002. This year's depreciation will be 4,002 times 33 and 1/3% will be 1,004. This 1,004 I will put it in as this year's depreciation in this year's income statement. Okay, as stated in the workings here. And then the accumulated depreciation. Last year the depreciation is 1,733 plus this year's depreciation is 1,004. Then I must minus out the depreciation for the accumulated depreciation for that tools and equipment, or for that asset that was sold, for that tools and equipment that was sold. Okay, what is the depreciation for the assets that was sold? Okay, you see the cost is 1,000, the net book value is 667. So that means the depreciation will be 1,000 minus 667. Okay, so 1,000 minus 667. So the accumulated depreciation 1,733 plus 1,004. I must take out from the accumulated depreciation. I must minus out, because this the depreciation for the asset sold was included in this 1,733. So now that asset is gone already. So I must take 1,733 minus out that depreciation for the asset that is sold, which is 1,000 minus 667 is 333. So 1,733 I must minus out the depreciation of the asset that was sold, minus 333. So the accumulated depreciation will be 1,733 plus 1,004 minus 333 is 2,008. This will go to my balance sheet. 4,002 minus 2,008 is 1,004. Okay, so this one is easy. I actually just pluck it from the question, right? So I have so-called finish up this part. So this one, amount due to director, where did I get this figure from? Okay, so this one is cash borrowing from director received. So you see, if you open a company, if you register a company yourself, okay, sometimes you will actually let's say the company need to buy some print ink cartridge. Sometimes when you are outside, you need to buy something for your business. You could have used your own money first. Okay, probably I use my own money 800 to buy ink cartridges or stationery for the company. And I did not, when I go back to the company, I have not take out from the company bank account back to my own account yet. So at the end of the year, this 800 will be will be still owing, um, still still owing, or maybe for whatever reason, whether directly or indirectly, this one 5th January, that you have used your own money to put into the company bank account first, for whatever reason. Okay, so this is cash borrowing received from director 800. Okay, so this one, that means the company owes the director 800, so it's under liability 800 put here. So now, is okay, this one, similarly, the gross profit minus all the expenses, you get your net profit. Okay, this one, retained profit, that means accumulated profit. Okay, last year's the profit is 12567 plus this year's profit is 11,200. So the retained profit for 2014 will be 12567 plus 11,200 will be equal to 23767. This is the accumulated profit for the company. Okay, so this one plus this one will be 67567. It balances with the total assets over here. Total assets will be 1,004 plus 66167. Okay, then now we do the cash flow statement. Net profit before interest will be this net profit put here. Then depreciation is 1,004 calculated already. Then loss on sale of tools and equipment is 167, so I also add back. You know why all this depreciation and loss on sale of equipment I add back? Because this loss on sale of equipment, the receive on loss on sale of equipment will be dealt with under investing activities. Anything regarding fixed asset is actually should be dealt with under this category, cash flow from investing activities. Okay, so we have proceed from sale of equipment. This is the money come in, money received, so it's positive, should put under investing activities. You must be very clear, this is cash flow statement, this is not a profit and loss account. That means this one is that's why I put it in such a way. A cash flow statement is different presentation from this one. Is another way to present the receipt and payment. A cash flow statement is actually in another way of presenting the receipt and payments. Okay, so as explained earlier, so even increase in the prepayment, I have to put under working capital changes. Okay, so working capital means current asset. Anything in current asset and current liability, excluding bank and bank overdraft, okay, should be put under this category, working capital changes. So you see why then how come amount due to director I don't put under working capital changes over here? That is because amount due to director, for me, I think that amount due to director is something like the director is actually using his own money to so-called finance the company. So this one, amount due to director, if I don't deal with it under these operating activities, I deal with it under financing activities, because I think the director is actually using his own money to temporarily finance the company. Yeah, he's actually using his own money to try and finance the company. Okay, so cash borrowing from director receive, I put under financing activities. This is a money come in, so I put here receipt. So this one, proceed from sale of equipment. So that means somebody give $500 for buying the equipment, so I put under investing activities. So this is money come in, so I put here. So this is 51,100 is the beginning bank balance, which is same as the last year's bank balance. Okay. Okay. Then 63767 is the ending cash balance, which I can get the figure from here. Okay. So you see, this one is the beginning balance, this is the ending balance. Then these are the receipt and payment done in a proper cash flow format. So this is, so ultimately this one is 11367. Okay, 11367. Then add 500, add 800, so you get 12667. This is the net increase in cash and cash equivalent. Add the beginning cash balance will be equal to the ending cash balance. Okay, so if you want to sit down and slowly so-called drill into your mind to analyze into this, you see, I take the receipt for the year minus the payments for the year is 12667. So that means this is the net increase. You know, the receipt exceeds the payment. This is the net increase in cash and cash equivalent. Okay, add the cash and cash equivalent at the beginning of the year will be equal to your cash and cash equivalent at the end of the year. So that's why this is another way of doing the cash flow statement. Okay, so I'm sure you can do it if you just do step by step. Okay, what you should do is after you finish this, you pause the video at the question part, or all of you should have taken my advice earlier that you buy the full set of notes for your A levels. It's only $16.80. Then, without looking at my answer, and following my advice on the step-by-step method of doing this, you do it again. Okay, this is how I can help you, and you should really help yourself. And if you work hand in hand with me, I'm sure you can improve and progress on. Okay, so now I have finished this part of the video. You can watch the video over again to make, and also try the question over on your own, so as to make sure that you can improve. Okay, thanks.